Assalamu alaikum, everyone. Our topic today is about the fractional reserve banking system. Why is it important to examine this fractional reserve banking? Uh, because today many people are not very happy with the Islamic banking system, because the nature of the Islamic banking system seems to be very similar to the conventional banking system, the riba banking system. The impact on consumer interest, the impact on the economy, how this Islamic product were developed to mirror image the interest-bearing loans, interest-bearing deposits. When people get into default, they would be treated like, like what we see in ordinary interest-bearing banking procedure. People are not happy with the way how the Islamic debt were amortized, Rule 78 and the use of flat rate method, and many of these practices, were adopted from the conventional bank. And for this reason, many of the public are unhappy about Islamic banking. And one of the criticism about Islamic banking is that it is participating in the fractional reserve banking. Even some of the critics, when they were so-called criticizing Islamic Bank, the first thing they will raise would be the fractional reserve banking, which is not wrong, but it is not accurate to first attack Islamic banking by virtue of the fact that Islamic Bank is part and parcel of the fractional reserve banking. And what that could lead us to, what is the implication when Islamic Bank participated in the fractional reserve banking? This is an important question so that we know that the Sharia compliant regime should not be confined to the prohibition of riba, prohibition of gharar, prohibition of gambling, prohibition of pork and alcohol. There are more to that because the application of al-bay' as the Quran has directed for the believer to practice and to avoid riba. And we can see that the application of al-bay' has been by default introduced in the banking business. So the banking company or the banking firms is the business entity where al-bay' is introduced, and this is where the challenge of using al-bay' within the commercial bank, which is part of the fractional reserve banking, and Islamic bank were modeled based on the commercial bank, where this bank acquire funding from the deposit market, and this deposit market are leverage market. So Islamic bank is basically driving their business based on leverage, meaning that the funding of murabaha, the funding of tawarruk, are all based on debt financing, and meaning that debt financing from the liability side. So bank uses leverage fund or debt fund in order to extend murabaha, to extend tawarruk and other financing contract. So let us look at this fractional reserve banking, because we simply cannot rush into the FRB factor without looking at the nature of the Islamic banking business as it is today. And we can see that this fractional reserve banking is one of the factor, that inhibit Islamic banking development. As I have said in my previous videos, that Islamic bank were set up, within a dual banking system. And this dual banking system is dominated by the conventional system. And when Islamic bank was set up in the various Muslim countries, then they are, absorbed into this conventional infrastructure, and that somehow tend to put a lot of constraint for the Islamic bank to actually apply the principle of al-bay', that the Quran has prescribed over riba. So we can see that, for example, in this particular diagram, you can see here that the Islamic bank was set up as a deposit-taking bank, meaning that they are a highly leveraged bank where the funding of murabaha is acquired from the debt funding, which is deposit funding. And in the Islamic bank, just like conventional bank, the bank, quote unquote, borrow from the depositors. So the bank is the debtor and the depositors are the creditor, especially in qardu deposit. And even in tawarruk deposit, because once the funding is labeled as deposit, then the Basel system will see it as a loan that the bank acquire from the public by virtue of issuing the current account, saving account, and fixed deposit account. So that is by default the Islamic bank were modeled based on that leverage model, where deposits are actually loan derived supplied by the depositors. And this is one of the problem that will amplify itself when it comes to our discussion of the fractional reserve banking, which is number 2 here. We can see that the Islamic bank were developed and were introduced within the capitalistic banking system, by which it operated based on the fractional reserve banking system. And we know very well that under this FRB, the bank seems to be creating money, and money meaning that money which is money M1, technically M1 is equal to the money created by the government, which is the currency, and number 2, demand deposit, which is money created by the bank, by the commercial bank. So we can see here that when this money is created by the commercial bank, then there's a likelihood that this power given to the commercial bank may be misused. As we can see in the economic history, in the financial crisis, in the Great Depression, and in the most recent 2008 subprime crisis in the USA, where, due to the low interest rate, there is overlending and overborrowing and causes asset prices to go up, and that, is the precursor to the subprime crisis, in view of the fact that bank, have been overlending to make loans to the homeowners, and eventually there's many bad loan or subprime loan been given out that finally ended in default. So this fractional reserve banking, it's basically perpetuate the making of loans and the creation of deposit, and that is why we want to look at the FRB now as we move on. If you look at the fractional reserve banking, we need to, to actually be a bit academic here. I presume that many of the critics have been quite excited when they were, mentioning fractional reserve banking, as if it is the first time they are learning about FRB. In economics 101, FRB is something that most of the economic students know very well, and maybe some of these laymen, public observer, when they come across this fractional reserve banking for the first time, they become excited and thinking that this is the only factor that may have make the Islamic bank to behave like conventional banking. No, that is not correct at all, because we have to somehow understand very well the economics of this fractional reserve banking in order to give it a much more proper role in the examination of Islamic banking, to what extent Islamic banking is compliant to Islamic law. So if we look at this particular diagram, number one, this is a very hypothetical balance sheet of banks for us to illustrate the operation of this fractional reserve banking. Number one, we know that leverage bank, meaning that bank using leverage fund, which is deposit fund over here, to make loans over here asset side. So the bank mobilized, let's say, 100 billion worth of deposits and pays depositor 2% interest rate. So as a banking business, when the bank acquire deposit funds, so meaning that the bank receive borrowed funds from the depositor, so now these funds belong to the bank. When we come to the asset side over here, we can see that this deposit become cash reserve. Cash or reserve, the term reserve is a technical term for cash, so meaning that the bank will hold cash or reserve of 100 billion. But cash and reserve does not generate any earning, 0%, and that is why by holding on cash will not be profitable, as cash gives zero interest. So in order to provide making losses, for example, if the bank hold cash all the time, we will see that the bank earning will be zero, meaning that there's nothing the bank can earn from holding cash or reserve, minus the cost of deposit, which is 2 billion, and the bank will be making a loss of 2 billion. So it is logical that the bank must convert cash into interest-bearing asset. And we can see in step 2 that the bank begin to convert this cash or reserve into loans, for example, 80 billion at 10%, and then into securities of 15 billion at 5%, and the bank will have to keep some of the asset in cash, 5 billion, to observe the legal requirement, but then the cash will not provide any return, but the amount of cash reserve here will not be as much as what it was before, as 100 billion. And we can see that when the bank started to convert cash into yielding asset, such as loan and security, we will see that the earning will be much better than before, so meaning that the earning will be zero from cash, and 8 billion from loans, 10% multiplied by 80 billion, and 0.75 billion from the investment in securities. And we can see that by converting the reserve into loan and security, the bank will be making a profit of 6.75 billion. So this is the business of Islamic banking or conventional banking. And for this reason, bank must convert reserve into interest-bearing asset. But you can see here that the cash of 5 billion, so this is the cash reserve that must be kept by the bank to fulfill the statutory reserve requirement. Okay, guys, we can stop here, and I'll see you again next time. Assalamualaikum warahmatullah.